our next guest, we have Mithun Aswath, Managing Partner at Kivah Advisors, who joins us on the show. Hi, Mithun. Good afternoon, and thanks so much for joining in. Mithun, are you a little bit skeptical about the small and the mid-cap space in the near term? We've had a heady run. The problem is in the last month and a half or so, they've been underperforming. At current reckoning, would you rather go with the large caps?
Yeah, good afternoon, Nigel. I think it's something that one needs to maybe monitor stocks individually. I don't think you can do a kind of a broad brush amongst mid caps. Obviously, with the large amount of flows that have gone into mid and small cap funds, some of these stocks may have run up ahead of fundamentals. Having said that, over the last few weeks, despite the indices, the large cap indices being kind of flat, we've seen bouts of correction within mid and small caps, and I think some sort of consolidation on the mid and small cap side is warranted, so that the earnings also catch up with the valuations. But over a longer term, I think opportunities continue to be presented in the mid and small cap space. So I don't think one can avoid looking at them.
Mithun, afternoon, Reema here. I think I remember Tata Motors is one of the stocks that you own in the automotive OEM space. Is that correct?
Yes, Reema. Good afternoon. I think we've been holding it for the last 2.5 years in client portfolios. So it has, both Tata Motors as well as Tata Motors DVR. So it has, investors have reaped rewards. And I think the recent development of the demerger is another potential value unlocking, which the company is embarking upon.
So how much more value do you think this demerger or the demerger will result for Tata Motors? Because we've already seen the stock go up 30% this year itself, and last year it was one of the best performing stocks.
Yeah, I think, Reema, once the demerger is through, we still need to understand what the plans of the management is in terms of what would be the focus area for both for the CV business as well as the passenger car business. Because you would also be aware by the end of next fiscal, the group would become debt-free as well. So I'm sure, they have plans to, potentially make the group itself maybe a pure EV hybrid sort of a company. And that's what I think the thought process was with JLR. So I think one needs to maybe just wait and watch, listen to what they talk about in the next quarter results in terms of what their plans are, and then maybe take a call.
Okay, all right. Mithun, normally when you join us, you give us one stock idea. And the recent one, I believe, is Greenply Industries. Tell us more. Why is that on your radar?
Yeah, disclosure, this is something that we've advised to clients. We're quite positive on the real estate sector, and we've, largely played it through ancillaries as well. Earlier we've spoken about sanitary ware as an opportunity. Here, plywood as well has gone through a little bit of a consolidation in terms of, the numbers. There have been quite a lot of imports from Vietnam and these other countries, which has plagued the industry, the domestic industry. However, the government has come up with BIS standards for MDF, which are to be implemented in February this year. That could curtail imports, and the domestic manufacturers could benefit. And Greenply is, largely a plywood company, but has a MDF capacity as well now, about 240,000 cubic meters. And this company is likely to do about 50% utilization this year on the MDF side, which would, expand in FY25. Also, in the recent past, they have divested their, loss-making unit in Gabon. They have, sold 51%. So they no longer need to consolidate that business. And there was about a debt of about 250 crores, assigned to the Gabon facility, which will also not be consolidated. So from Q4 onwards, you will see numbers of largely India, ex-Africa. So I think this company is well poised. I think the industry itself is well poised. So this is something that we've looked at.
There is a fair amount of caution in the small cap and the mid cap universe right now, Mithun. Have you booked profits in any of your portfolio stocks, and if yes, which ones?
So I think, Reema, we do take profits out of companies where there's been a large move in the stocks ahead of time. So, for example, if we expect 50% or 100% over 2-3 years, and if that happens in 3 to 6 months, obviously one needs to take some chips off the table. I think the only recent one that where we've booked profits was Zaggle, which had gone up over 100%, I think, over the last few months.
Okay, all right. Mithun, I wanted to ask you about how are you placed, on some of these mouth-watering, so to call it, names. HDFC Bank. What's the view? The problem is that valuations look great. It's a great franchise, but you have to be ready for at least 2 or 3 quarters of pain. The problem is on the cost side, on the liability side. Cost of deposits are going up. They're getting scarce as well out there. And though they're adding branches, the good work of this will come only in the next few quarters. So what do you do at current reckoning at around 1,430?
Nigel, to be honest with you, we own both the quality private sector banks, HDFC and Kotak, and we've advised clients on that. Both these franchises are solid. Their earnings are growing anywhere in the region of 15 to 20%, and valuations now have really come off and are lower than even pre-COVID levels. So I think it's just time. It's going to test our patience. But you've seen financials of all sorts do well in the last couple of years. But I think now in a normalized world where most of the good news in terms of NPA is coming down is largely behind most of the financial sector. I think both HDFC and Kotak should start at least moving in line with the earnings growth, if nothing else.
We've seen a fall in many of these hospital stocks over the last couple of days. Was that an opportunity to buy, or do you think that's not a sector that you like right now?
So I think the healthcare space, like you mentioned, the hospitals have got re-rated significantly. And I think the recent correction was on account of potentially a government proposal on capping prices. But I'm not sure whether this could be implemented across. So I think maybe the stocks will settle down and it was an excuse for a little bit of a pullback. Having said that, I think that the sector is well poised over the next few years. Valuations are slightly expensive, but I don't think the long-term opportunity is there and present for these companies.
Mithun, we'll leave the conversation here. Thank you very much for joining in with your perspective. We'll slip into a very short break on that note with the news that the market is dipping once again and getting back to levels of 22,350. We attempted a bit of a pullback 10-15 minutes back, but that's being sold into. So once again, 130 points lower on the Nifty, Sensex down a full 500 points. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our technical experts.